You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. What's going on? We're back. We're live and in your ear holes here for the Thursday edition, episode 2 here, of your bi-weekly options extravaganza known as the Option Block, what the cool kids call the old OB. My name is Mark Longo. I'll be your conductor, your guide for our next hour-long journey through the realm, the deep, dark realm, mysterious realm of options. Of course, you guys know where to go to get us on demand. A lot of you like to get it that way. Make sure if you're listening just to the Option Block, if you haven't done so for whatever reason, make sure you upgrade to the full network because you're missing, again, nearly a dozen programs out there. All sorts of fun nuggets, like maybe that panel we're working on to get to you guys that we did last week, which is kind of exclusive for the industry crowd, but we like to sneak cool stuff out to you guys as well. So if you get in the full feed, you'll get that. And of course, if you're listening on demand, all we ask that you like it, then you rate and review it so new folks can continue to discover the show wherever you get the show, every platform in the App Store, wherever you get the content, just rate it there. And, of course, if you want to go above and beyond, you want to get exclusive shows, you need more in your life. You want Options Oddities every Friday. You want Pro Q&As every Tuesday. By the way, I do believe Double Pro Week may be making a return next week. So all you pro members, buckle up. Got some content coming at you next week, as well as giveaways. We're coming up. Can't believe April's almost done already. We got to do the April box. Get in there now. Get your name in the hat for the drawing of the April Options Insider Pro Trading Crate. You never know what awesome stuff you're going to get. Everyone is bespoke. It's custom. I'm looking at the mountain of stuff here in the corner of the studio. It's gotten a little bit smaller since we started doing this, but we haven't really made a dent in it yet. So get in there. Theoptionsinsider.com/secret club is the place to go to learn more about how you can participate in all that good stuff, as well as all the cool stuff we have planned for the future. We're always planning cool new stuff for you pro cats. So get in on there. And let's see who's getting in on us today on the show. First, let's go out to a quiet, a sleepy, some might say a subtropical hamlet, maybe in like June and July, perhaps. It is St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to Ye Old Program, sir.
Always a pleasure to be on Ye Old Program, especially on an 84-point up day.
Yeah, it's looking decidedly Uncle Mikey. We'll get there in a little bit. First, let's go out to the dark, the stormy, impenetrable fog and mist shrouding the shores of Maine. Peering through the gloom, you see a lone tower. And at the top of that tower, there's a lone window with a lone light shining through it. He's very alone. And that light is the beacon, known far and wide to the clam pirates there as the Rock Lobster Beacon from Mr. Andrew Giovinazzi. from optionpit.com. Mr. G, welcome back to the program. How you like that imagery, huh? You're in your tower. You got your beacon to warn away the clam pirates because you're coming for them, sir.
It was quite impressive imagery, I have to say. It was quite impressive imagery. Like I don't know what to go with all that imagery. It's so cool.
Maybe you need to add a cool tower to the compound. I'm just putting the words out there. It's up to you to bring them to life, sir. As we keep on rolling, it's time to bring these markets to life. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. That is the portion of the show where we break down what the heck is trading. And as Uncle Mike kind of gave us a spoiler already here on the day here, we are seeing some green back on the screen, a color we haven't seen in a little bit. We saw flashes of it, blips of it, but then it got ripped rudely away by all the red out there. Coming into showtime, as Uncle Mike alluded to, we are back in rally ho mode. S&P up over 2, about 2.2%. NASDAQ up about 2.5%, and the Dow up about 1.5%. That means the S&P back up above that critical 4,200 level. You know, we were talking about that on our last show. And just throughout the week, it seems like we were bouncing off of it. That's where the true support really lie in the marketplace, it seemed like. And as we were recording our advisor's option on Tuesday is when we finally broke through it. And that's when it seemed like, oh, watch out, look out below because the support is gone. And we did hang out for a while south of the 4,200 level. Today, kind of a combo of earnings and a few other things combining to lift the market. At the end of the day, more buyers than sellers, kid. And that's what we got out there today. Come into showtime. We did see VIX north of the 30 handle right before showtime. It was actually about 30.75, which pushed it almost unched from where it was on Monday's show. Of course, as we got closer to the launch of the show, we saw VIX coming in a wee bit to the tune of about 28.75 when we kicked off the show, which actually puts it down about 1.5 points from where it was on our Monday show there. So VIX giving up some of the ghost out there. I see some of our chat talking about VIX 27 puts. Yeah, there's a lot of interesting things you can have or could have done out there in VIX land. We'll get to some of that in a little bit. VVIX was at about a 120 right before showtime. Let's see where it's hanging out right now. It's probably 116 or so. So it still has come in about 4 points from when we started the show. And at 120 was already down 3. So 116, that puts it down about 7 from Monday's show. And, you know, the ever impressive crap fest known as VXX. What the hell is it up to right now? Well, let's go see. It was at 27.5 right before showtime, which put it up about 1.25 points. As we got closer to showtime and actually launched the show, it's at 26.25, which actually puts it was up 1.25. So that means it's actually exactly unched from where it was on Monday's show. Man, the vol gods giveth and they taketh away. Or in this case, Barclays giveth and taketh away, because no idea what the hell's going on with that product anymore. UVXY was at a 17, almost an 18 handle not too long ago, listeners. Right before showtime was at a 16.5. That puts it up about 1/3 of a point. And as we got closer to showtime, it has given up a full point. It is at a 15.5 now. That puts it down about 2/3 of a point from where it was on Monday's show. So my goodness, you gotta pull the trigger quick on so much of this stuff. You know, it's hard to dive into UVXY when things are backward, but second the futures start easing, man, look out below out there in these products. SVIX, which is of course the infamous inverse VIX now, it was at about 11.35 right before the start of the show. I put it down about 1/3 as we're kicking off the show now at about 11.75, which actually puts it up about 1/10 of a point or so. This is, again, not one we have much track record on yet. And of course, UVIX, aka the 2X VIX product, was at about a 21.5. That put it up about 0.5 point coming into the start of the show now. At about 1975, listeners. So it's given up almost 2 points from there, 1.75 points. That puts it down 1.25 points from where it was on Monday's show. Man, a lot of vol living just in the last few minutes. Another reason why you can't really set up for vol view, or I should say vol views and the option block too far ahead of time, listeners, because things just get annihilated right before showtime. Same deal. Vol Q was at about a 33.65 right before showtime, puts it down about 1/10 of a point. It was actually 33.75 on Monday's show. And coming into today's show, that would be 31.75. So it's down exactly 2 points now from where it was on Monday's show. So, man, a lot of vol living just in the last 20 minutes out there. So let's go around the horn. Let's go back to that imposing fortress tower on the shores of Maine, where that one light, always scanning, always watching. Mr. Rock Lobster, sir, what are you always watching in the markets today?
I am agog at the rally. So we've got negative GDP. We've got zillions of dollars of deficit spending. And the best we can strangle out of it is a minus 1.4 gross domestic product for the first quarter. Now, I could say that like the Ukraine war and all those other things, are freaking people out. But I have to say, like, hey, a rally is a rally, and we are rallying. There ain't no doubt about it. So although with VIX still around 30, this 2% rally could be a 2% down day tomorrow. Quite easily. And be happy about it. So as far as vol goes, one thing I'm noticing is the volatility for next week's options around this Fed announcement have not moved a whole lot. So, SPX has moved up 2%, VIX has moved down. VIX will move down as we move up the curve. While VIX drops by the math of the VIX. But as far as the vol for next week, it's down a little bit, but it's not down a lot. It was actually up this morning. Things were looking, like the market just wanted to say, hey, this big sell-off is really bad, or just this horrible GDP number is bad. And then, of course, this is what everybody always realizes. Oh, the market is bad, so the Fed is not going to cut rates as much as we thought they were, right?
Yeah, you got to love all that backwards math everybody does. Everything's terrible, so the Fed won't be as bad.
Right. So, and until the Fed gets out of the market, which, to be quite frank, they've been in it for a dozen years, and they haven't helped at all. All they've done is they've blown up the balance sheet. I can see during COVID when they were there trying to stabilize things, but it was clear 3 or 4 months after that things weren't going to go to zero, right? So, but they just didn't stop, there was once they start, they just don't stop, which of course is the problem when the government does anything. But that is another story for another day. So at least for right now, they're like, woohoo, Fed's not going to stop. However, bonds aren't really rallying on that. Okay, Facebook, the earnings weren't so bad, but they've had the slowest sales growth ever. I don't know. I don't know where the big silver lining is in all this. The only silver lining I can think, and maybe TOSAW can comment on it, is just, maybe the Fed's just not going to raise a half a point every month for the next 12 months, which is certainly possible. And I just think for stocks that might give it a temporary lift. I don't know if it'll be a permanent lift, but it's making everybody happy today for sure. So, that part's good. But as far as vol goes, I think the vol around the Fed announcement is still there. It hasn't gone away. So we mostly just have it's like a slight relief rally. But if you look at volatility per strike, I don't see it going down a whole lot. So let me see here, the May 6th. So I'm looking at sort of the downside skew. Vol is pretty much unchanged from yesterday on downside skew area. I go out to May 20. Let's say let's go something kind of skewy like the 415s. Trading at a 28 volatility right now. And yesterday they were, so the May 24 15s. Let's see if we got any kind of real drop in vol. So I've just mostly been watching real short term because that's kind of where the action is for me at this point. Because I don't think the larger 30-day vol is going to do much until after the Fed speaks. And of course, live vol is not giving me any data when I want it. So it's a little bit annoying. I am going to guess, though, that this volatility is not moving very much. And let's see, what is my guess? So today, the 28th, that volatility is about 28. And yesterday, the volatility was 28.26. So about 26 basis points in vol drop. That's a very small vol drop on the downside put. So VIX looks like a big drop, but it's actually kind of a small drop relative. So we have this huge rally in SPX, and it's hard for VIX. It's hard for individual options per strike for that vol to drop too much. So it's kind of going to plan, at least right now. And the only other thing I would say is the oil side of the business is looking pretty rosy here, as maybe people stop buying Russian gas and buying everybody else's gas. So that's kind of exciting.
Yes, very exciting indeed. I'm with you. I'm equally agog at the more buyers than sellers today. You're right. You can work it into some backward calculation for it. Maybe the Fed won't be as dire, but that's kind of the only silver lining. Lipstick of a horrible pig, because you're right. We got economy actually shrinking now. We have terrible inflation. That's kind of a worst case scenario there. You got rampant inflation, economy in the toilet. You don't usually like to see those two back to back, but hey, maybe the Fed won't do as much. So I guess that's a reason to buy these markets. I don't know. I've been agog at the bulls out here in the broad S&P for certainly a lot of this year out here, and today is no different. Hey, if you're a bull out there, enjoy, have fun. Make hay while the sun is shining, as they like to say, because the sun is shining today. And Uncle Mike certainly is a bull, so he is probably deeply offended at everything the Rock, Lobster, and I just had to say. Mr. Uncle Mike, I should say, tell us why we're both wrong to be agog at this rally, sir.
Okay, so we've had a 13% pullback since the first of the year in the S&P 500, and basing it on peak to trough, basing the peak being the first day of trading of 2022 and the trough being yesterday. I guess technically we were lower for a little while in February, but keep in mind we're 4 months into the year and we're down 13%. And so a lot of times bad news is factored in before the fact that the news is released. And so on here, this is just a pullback. And when we've had the markets going up as quickly as we have, a 13% pullback is not out of the question. Now, today, who knows what the market, more buyers than sellers, kid. That's pretty much what anything can get taken back to. But understand that if we're looking at bad news in the marketplace, the market knows what's going to happen before it happens. And so apparently with the bad news with which we're facing today, with just everything, quite frankly, then the market's known about this. And so we're down 13%, or as of yesterday, we were down 13% on the year. And that's not a good market when we're in April. It's not like it's December right now and we're like, oh, it's a 13% down year. No, this is late April, even though it doesn't feel like April in the Midwest. It is late April and we're down 13%. And we're down 13% off of really awful news. Now, why is it going up today? The reasoning or the rationale for today could be short covering. It could be what you guys were talking about, the Fed not raising rates as much. Who knows? But just understand that the market has put some bad news into it. Now, where are we going to go from here? I'm just in some put spreads at this stage, or that's the major exposure that I have with my aggressive strategy. I did roll down on Tuesday. I didn't necessarily have to, but I'm still sticking with my rule number 1, never let them go in the money. Rule number 2, don't forget rule number 1. And if you do those 2 rules, you're usually going to be okay on it. But I believe that, at least for the time being, we're on the lower end of, I shouldn't say the lower end, but I think that there is reason to be excited because of the fact that we already are down the 13%. Now, if we do go lower, then I think that it could be problematic, of course, but I wouldn't give up on this market as a whole because of the fact that it's the market and it goes up. That's what it does. And so I almost feel like I felt back in our Apple days when I was in Apple for so long, and Sebastian Longo would just rip me a new one every day of how I was wrong to be an Apple. And so my comeback was always, it's Apple, and Apple would go up. And so I still got out of it way too soon, or a vast majority of the holdings that I had in it. But I think today, just like it's the market, and markets go up throughout time. That's what markets do. Do they pull back? Absolutely, of course. And you need to be prepared for it and manage your risk accordingly. But yes, there's more buyers than sellers, but also understand that it's the market. And over time, the market does go higher. Now, some other things, oil is back above the 100 level again today, so that's something to keep an eye on. Treasuries are selling off a little bit today, nothing major with that for the 10-year note. Silver, we're not having a lot of movement on silver on the day today, relatively speaking. And to add to what Andrew said, with the VIX, we are down roughly 10% on the VIX and a 2% up move in the stock market. So not a lot of volatility selling today, to say the least. And that's my take on it.
Now, you mentioned your put spreads. Did you do any other adjustments or anything else when we were in the middle of that? Did you start freaking out when we broke through 4,200? You can tell me. Just me and you listening.
Oh, of course, just me and you, right? Yeah, I what I did is whenever a client would call, I'd scream as loud as I could. There's plenty of reason to panic, and I'd hang up real quickly. So I tried to do that as often as I could. My put spread's well below the 40. It's below the 4,200 level, but 4,200 was my line in the sand of where I wanted to get out of. So at the end of the day on Tuesday, when we were below the 4,200 mark, that was my cue to roll down. And I'll be honest with you, even though we are well above the 4,200 level now, at the 4,277 level, I'm still pretty comfortable in being rolled down.
Yeah, it was. Again, I'm not the most technical kind of guy, but it does seem that the 4,200 was holding us up, and then now we're rallying off who knows what, smoke and mirrors, kids. That's why we put it to you really quick. We have a question of the week that's going to be live throughout the end of the week. We put a really quick flash poll, going to run the duration of this show, maybe TWIFO, asking you right now, get in there at options, listeners. Does this rally have legs? Are you buying in here? Is this just a dead cat bounce? Give you two choices, obviously. Yes, this rally has legs, or no, this is the dead cat bounce. Right now, again, it just went live a few minutes ago. 75% in the dead cat bounce. Oh, I just ticked 50-50. We're even. We have a market. 50-50 for yes, this rally has legs, and no dead cat bounce. So this will be live throughout the duration of the show. Podcast listeners, you may be out of luck. This is just tweaked again, just tripped again. Now it's 60-40, no to yes. So get in there, listeners. Make your voice heard. It's good reason to be hanging out at options throughout the day. You never know. We're going to have a fun flash poll like that. So even if you're not listening live, you could still play along. At options is the place to go. Let's go around the horn, see what's going on from an overall volume perspective out there today. And index is doing decent paper. Not quite as robust as what we saw on Monday, but also it's a rally day. So that usually isn't the key to let the dogs off the leash there in terms of just complete blow the doors off type of volume. But we are seeing some action out there. 375,000 contracts on the tape for VIX. Again, movement is vol at the end of the day. Everyone forgets that. Everyone thinks all the downside and that's it. But at the end of the day, we're moving. So VIX is putting up some numbers. The ADV 463 has ticked up about 10,000 contracts a day or so since Monday. We'll see if we can, obviously going to probably hit that today. So we'll see if that number can tick up again for vol views tomorrow. SPY at a little bit north of 3.25 million, almost 3.3 million. That ADV is 6.05 million. So SPY at more than half of its ADV, but not, blowing the doors off yet. The S back down to 770. On Monday's show was like 1.5 million by this time. So not quite as rock'em sock'em robots in the S today. The ADV 1.77 million out there. Small caps looking pretty action packed. Small caps at about 515,000 contracts on the tape right now. Russell 2000 up about 1.5% right now. So looking pretty good. The ADV 716. So it looks like it's going to hit that today. If you want more small caps and all things equities as well as crypto, that's coming up a little bit later. We got Mr. Tim McCourt joining us on TWIFO a little bit later. He always comes to talk about cool new products, listeners. So should have something fun in store for us. Probably something going to go on in the equity space as well. He does wear multiple hats over there, including equities and crypto. And every other cool new product they launch seems to come out under him. So stay tuned for that in about almost exactly an hour now here on the show, listeners. Let's look at the most actives here. Let's go out to Number 10, it cost you about 248,000 contracts, so right around 250,000. That's a decently active day. You know, our last show Monday, it was all indexes. As you recall, it was like less than 150,000, I think, to break into the top 10 that day, which is, again, one of those interesting days. Today, we're a little bit loftier than that. 248,000 contracts, so right around 250,000 to break into the top 10. That gets you to PayPal. Number 9, AMC. So back to the meme land, also 248,000. So kind of a bit of a tie for 10/9. Number 8, Microsoft, just managing to edge them out, 249,000 contracts for number 8. Microsoft was a weird one because they came out with good numbers, good earnings, and they still got caught up in all the massive sell-off palooza. It's a rough time when the macro winds are sucking everybody down. It's hard to come out and say, look, we have good earnings, because it just gets washed away with the tide. And Microsoft looks like they're making up for it today, up about 2% or 5 3/4, right around 288, 289. Let's see, how low did they get in the sell-off? And Tuesday got down to 270. So they're up 18 handles from there. So that's a nice little pop for good old Softy. Number 7, AMD at a nice, clean, crisp 300,000 contracts exactly. Number 6, right behind it, it's old friend NVIDIA, hanging out there at 418,000 contracts. Number 5, it's Twitter. Now Musk's Twitter, call it what you will. 461,000 contracts on the tape for that. Number 4, it's Ford. You know, this one, they had earnings overnight. I know some of our listeners were playing out there. They're actually bucking the trend. They're selling off, so maybe not quite as robust as some Ford bulls were hoping. I know a few of you are out there looking at puts. We were talking about some puts to the dark side there in Ford on options oddities last week. So it looks like it got down this morning to about, actually hit the 13 handle, 1392. So we have rebounded from there, but still it's at about 1450, almost 1460. It's still off a buck, and looks like it's catching a lift now. But yeah, I got to hit a 13 handle. Haven't seen that in Ford in quite some time out there. Intriguing stuff. Looks like Rivian really hurt them, their stake in Rivian, which was something they were, that was helping to lift them not too long ago. Now that Rivian stake looks like it's coming back to bite them. Ford good for 494,000 contracts. Number 4 out there. Number 3, yes, I said number 3, it's Tesla. It's an interesting day when Tesla is merely number 3. It's off 15 handles, 865, or nearly 2%. So Tesla bucking the rally today as well. Good for 1.2 million contracts, though. So Tesla looking weak. Maybe folks concerned Musk is drawing his eye from Tesla to take a look at Twitter. He also had to sell a bunch of stock, obviously, to buy Twitter. So perhaps some of that combining, the funding concerns, or it looks like people are talking about over the Twitter deal. Interesting. Number 2, good old FB, good old Facebook, a.k.a. Meta, whatever the hell they're calling themselves these days. They're having quite the lift. 31 handles, 18.2%, back over the 200 handle today, almost 207. Our buddy, Mr. Saad Hussein from Shift Search, was just talking on the Pro Q&A on Tuesday about how he had some puts in Facebook that were 13 handles in the money. Hopefully he closed those prior to earnings. It got down as low as about 175, listeners. It is about 30 handles north of that now. Wow, 206, almost 207. So, man, quite the run here in Facebook. Still well shy of the 384 level it was at before all this madness began. And number 1 out here, kind of taking back the crown again today, listeners. It's Apple, the fruit company. Getting a nice lift, up 4.3%, nearly $7, 6 3/4, 163 and about a third. Looks like they're talking about a buyback maybe or some other stuff. Obviously, we have a fruit company coming up a little bit later, so maybe got a little bit of a pre-earnings blush going on here as well. But that's a pretty big move for Apple just intraday ahead of earnings. That's kind of interesting. Good for about 1.25 million contracts though, so that's gonna take the crown out there. Speaking of earnings, like I said, there's a lot popping off. Facebook yesterday, Google and Microsoft were on Tuesday, Coke, Activision on Monday. Today, we got Apple, Amazon, Roku, Intel, Robinhood, Gilead, Caterpillar, MasterCard, McDonald's, Southwest, and Twitter. Good old Robinhood laying off, 9% of their staff? They broke through that 10 handle, Mr. Rock Lobster. That was interesting. Back at it about today or so. We'll see what happens. That's all before their earnings. Earnings scheduled for today. Tomorrow, we got Exxon, Chevron, AstraZeneca, Philips, and Honeywell. Let's look really quickly. We had those are results reports. We went hit on those on Monday's show. Let's see. Can I find the fruit company or Boeing? Friends across the street. Spotify. No, I don't have them here. You know what? We're waiting for the latest edition here of the earnings move results. Where's my Apple? We don't have it here. I'll have to talk to the Oracle of New Hampshire. By the way, that's live on the network now. If you missed our conversation on Tuesday on the advisor's option, you guys can get it if you're listening to the full feed over there on demand. Right now, the season hanging out, again, at about a 62%. It's pretty anemic, but that's only factoring in 99 names. We have to run the numbers for this morning to get all the most recent reports in there. I'm sure that number will change as we keep on rolling. Let's look really quickly at the earnings trades report as well. A lot of trades on the docket here. So far, we're tracking 43 long straddles, 24 short straddles, and 53 long calendars. And they're adding new ones right now. Looks like 1, 2, 3, 4 short straddles, and 1, 2, 3, 4, 5, 6, 7, 8 long calendars are being added on the most recent report out there. So check that out. It doesn't mean you have to do these trades. We can look at it and say, why are these trades lighting it up? Why are these trades popping and flagging as interesting to the analysis over there at ORATS? And maybe you find some other trades that you like that are similar or in different names, whatever. It might just inspire some interesting analysis of your own. So check them out there and stay away from the short calendars. It'll blow your mind as we keep on rolling. It is time to blow your mind again with some unusual activity. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That music means it is time to dance. It is time to unleash the Eye of Sauron and see where it fixes its gaze. Listen, let's start it off. Mr. Rock Lobster, do you recall on our last show on Monday, we profiled some weekly, pretty close to the fire puts in Juniper Networks. Do you recall that, sir?
I do. I do recall some close to the fire puts.
Let's say we pay those off. What do you think?
I think that's not a bad idea. I think the listeners would appreciate it.
Give the peoples what they want. All right, Juniper Networks on Monday's show, listeners. The stock was hanging out at about 34.20, and we saw someone coming in and just backing up the truck to get all of these April expiring this week, so the 29th, 33 puts. We saw 2,214 going up. There were 65 at 70. He paid 70 cents for 2,214. He came back and said the dreaded words, how are they now? They were now 60 bid at 75. And he said, I will take them all for 75. And I'll take 1,100 of those more. And then he came back again a few minutes later and said, how are they now again? And the market maker's like, I don't know. 70 bid now? 70 bid at 105. And he said, okay, buy them. And he bought them for 95 cents, 5,000 more times. A total of 10,000 he traded on the day. So obviously some more skated in there as well. So this guy, Mr. Rock Lobster, as we concluded on Monday's show, was really concerned about the very near-term prospects for Juniper Networks. And, at least early on, it seems like he maybe had a reason to be, because the stock hung out there for most of Monday at 34. Then on Tuesday, we know the market started getting weak. And then on Wednesday, it looks like the bottom kind of fell out of Juniper Networks. It got down to 31.78 on Wednesday. That was the low pretty much for the week. And I remember he bought the 33 puts for a high of about nearly $1, listener. So he still was looking pretty good. He was shy of the 32 handle, which was around his break even. And as is always the case, Mr. Rock, remember I said this on Monday's show, Mr. Rock Lobster. What did I say? I say he's going to get a move and he's not going to do anything. Do you recall me saying that on Monday's show, Mr. Rock Lobster?
I do, sir. It was prescient.
It was very prescient indeed. It's like I've done this before or something. Because he got a decent move. These puts were looking decent. Remember, these are weekly puts. So you can't hang out on these things. If you get a move, even by day 3, you might argue it's almost too late. He got enough of a move to make up for the just atrocious decay that was in his face all day. And so, yeah, you know what you do at that point? You start taking some of them off. And yet that did not happen. As of this morning, there were still 10,000 of these puts. I'm going to pull them up right now, see if he took any off during the day. Let's just look really quickly. No, I don't see any of those there. No, 34 puts. Is that? No, there are 33 puts. 1,200 of the 34 puts have traded today, but nothing on the 33s. So, yeah, these are still open, all 10,000 of these. And the stock's at 32.5, so he's still looking all right. But he's not looking anywhere near as good as he was, let's say, yesterday morning. So he has the decay coming out. On top of that, he's lost $1 in the stock. So he's still hanging out at a close to 50 cents in these puts, but he paid more than that for all of his things. So he's losing money. He's losing almost half of $1 on that 5,000 lot. So you're talking like around $250,000 just there. And then the rest of it added on. It's probably close to $500,000 this guy's out right now. So Mr. Rock Lobster, as I predicted on Monday, this guy might get a decent pop, but he's not going to do anything with it. And it looks like it's all going to be for naught, sir. Is that your takeaway as well? Obviously, we still have 1 day left, but looking not the best right now, looking dicey.
Yeah, I mean, it's all I can say is he's happy the market rallied today and not tomorrow, because he's out of time tomorrow. So yeah, as of right now, I would say definitely on the bubble. And there is a little bit of volume too around that today. So
the 34s are trading today weirdly, but not the 33s.
No, not the 33s, but the 34. Somebody closed those earlier today for $1.75, like kind of aggressively hitting the bid, sort of, to get the heck out of Dodge on them. So
he's like, I'm out, get me out.
Exactly. So I mean, they had the earnings. The earnings were bad. The stock is starting to come back a little bit. So who knows what's going to happen at this point? But anyway, I just thought that was, it was definitely, it's interesting. It's interesting there.
Yeah, so this stock could obviously fall out of bed. This market, this rally could lose all of its steam, and we could gap down by later today. Who knows? Looks like our audience is thinking we're dead cat bounce. We'll see how the
weirder things have happened.
Weirder things have happened. So these could work out, listeners. We're not writing his tombstone yet. We're just saying when you have a trade like this, if it's a weekly and it's a couple days in and you get a decent move and you're making money, you don't have to get the heck out of Dodge on all of it because maybe you have legitimate concerns on it. You probably should start taking some off. Would you concur, Mr. Rock Lobster?
Yeah, I mean, you're up some money. The stock did get down to, it did get down to like 31.5. So there was some money. Now we don't know if they bought stock or not, which is entirely possible. So if they went to the ultra savvy store, maybe they bought 500,000 shares or 1 million shares down at like $32 or 31. Let's see here, because they were 33 puts. Yeah, they could have paid maybe 31.5. They could have bought all they wanted at that level. So it's possible that they went to the savvy store and bought this.
I don't think this person is a savvy store shopper. I'm just gonna put that out there. I mean, we could be charitable. He bought it all for the gamma, and he scooped the gamma at the ultimate nadir in the stock. In which case, he's laughing all the way to the bank at us. But that is a subset of a very lucky subset that could do such a thing. So I'm going to put this person in, not a shopper at the savvy store, but he's just riding these puts. And unfortunately, it seems like the market turning against. Again, he's got a day. So we could change that at the end of the day. He could be laughing at us again. But right now, as I said, past his prologue, this one probably going to end in tears, and it seems like it's going that way. All right, let's go out to, this is the newcomer to the outback. I love when we get newcomers. This is ALKS PLC. You know the PLC, so right away you know it's somewhere over there in the UK. And this one looks like an Irish domiciled, looks like a biotech. Its subsidiaries are Rodin Therapeutics and a few more, so it seems like it's in that biotech pharma space. And ticker symbol ALKS, ALKS. And this one's had a couple tilts at the windmill. A year ago, it was trading 21 3/4. So a wee bit south, about 8 1/4 below where it is right now. So that's 38% below. So that's not a bad run. Then it had a nice run early on in the year. In August, it got up to 31 1/4. And then it hit its high for the year of $33, right around that time frame on September 28th. And it hung out there for a brief second, as biotechs are wont to do. Then it just got clipped again, right back down to 21.5. So the year was pretty much done. In fact, I think it hit its low for the year then on December 1st, actually. It hit 21.17. So it actually had wiped out the year. So it had a nice run, and then it gave it all back. And then ever since December 1st, it's been fighting to slowly claw its way back. Had a few fits and starts, but it's had a nice pop just in the last session or so. So obviously some decent earnings perhaps out of ALKS here. Looks like they were 27.14 yesterday, and coming into today, they hit 30.38. They've given some of that back now, 29.98, but still a nice little roughly $3 pop just in the last 24 hours or so. So a lot of that year coming back just in the last day out here. Otherwise, it's been kind of a bit of a fight out here. But yeah, this one's had 2 tilts at the windmill. It's like the second time, maybe the charm. We shall see, hanging out right at the 30 level right now. And Mr. Rock Lobster, it seems like someone has decided that this recent pop out here, it's good. They like it. They're going to take it to the tune of dumping a bunch of the 32 calls in May against it. They came in and sold nearly 9,000, 8,995 of the May 32s, as the Irish would say, for 30 cents. They got a dime worth of price improvement. This market was atrocious. It was 20 cents at 80. But then again, I did pull up the ADV on this one. The ADV is 585 contracts. So before you get too angry at that market, listeners, think of the market makers got to make markets in all these strikes on a name that does 585 contracts a day. You're not going to be too incentivized to make a tight market either. So they managed to get these off at 30 cents. That's not bad. The stock was a little bit lower. It was 29.61. So they may have ticked against them. It looks like the stock just ticked to 30 again as well. So these may be a little bit in their face. The next earnings are not till July. So they just had their announcement. Yeah, this is post-earnings. So they just had their announcement right now. So Mr. Rock Lobster, looks like someone's liking this rally, but they're going to take advantage of it to fade it. And if it gets up to $32.30, they're out, sir. What say you?
Yeah, I'm looking at this, and I guess why the market makers made a 60-cent wide market. Kind of reminds me of the old days. It's because the stock went from $26.75 to $32 on the last earnings. So it's kind of all over the place. So I'm thinking this person's taking their 30 cents. And they're thinking that's about as good as they get because it traded as high as 32 on the earnings, and now it's back down to about $30. So
this name had this huge,
taking what they can get and hitting the road.
This name had this huge pop after earnings. Like I said, it does 500, 600 contracts a day. So their post earnings, they just did 8,995 contracts in this one trade. So 9,000 contracts right there. Guess how many contracts they've traded total today, Mr. Rocklaw?
Okay, I'm going to take a wild guess, and let's see what
it is post earnings, right? So they should be trading it up, right?
Right. This trade was
9,000
contracts. So I'm going to say they traded 9,300 contracts.
Yeah. Yes, 92.95. Yes, they've done a whopping 300 more contracts. So before you get too mad at that market, listeners, nobody's trading even today, even after earnings. Someone came and scooped 9,000 of this illiquid nonsense, and then, sold it, and then nothing else. These guys have nothing else to lay it off against, these market makers. So yeah, that market makes a little bit more sense now. Yeah, even today, nobody's trading this thing. Wow, that's rough. That market maker's gonna be wearing that one for a while because he got no way to get out of it. Good times, listeners. All right, let's go on out now. Let's do one more review before we get to you listeners here. Let's go out to the March 21st show, Mr. Rock Lobster, to the eyeglass manufacturer known as Warby Parker. Ticker symbol Warby, WRBY. And I won't talk about their year yet. It's a bit of a spoiler. I'll just say a year ago they were trading $54.50. That's all that I will say for now. But on the March 21st show, so a little over a month ago now, a month and a week, we profile, looks like someone coming in and drawing a line in the sand, Mr. Rock Lobster, saying this far and no farther. On the April 22 half puts, they sold 7,790 of them for 36 cents. That was almost 100 vol, about a 98 vol. So that was pretty juicy. The stock at the time was $30.79. And, we didn't hate them, because there was a huge vol, and it was over 8 handles out of the money. So it was not exactly the most aggressive of rights. Let's see. The next earnings are in May 12th. So this isn't even, well, actually, these are April. So yeah, this isn't even an earnings trade. This was just straight up heck of a lot of juice in these downside puts. So someone was taking advantage of that. And obviously, April expiration behind us now. These puts were, these puts were still open at expiration, all 7,800 of them. The stock closed, Mr. Rock Lobster, at 28.18. So this guy did all right. He made nearly 300 grand, about 290 grand, which I think you'll say, Mr. Rock Lobster, falls nicely in your significant other's Ferrari camp, would it not?
I think that there's a reason that number exists. And you know what? I want to meet the guy because he's probably got 10 girlfriends and they've got each got a Ferrari. So he's apparently quite busy. He's quite busy, maybe. Or maybe it's a lady and she has 10 friends.
Gonna say
friends.
It's a lady, she could have all sorts of friends. We're egalitarian here in our put writing analysis. But yeah, it's lucky he didn't sell them a week or two out, or a month, or actually a week or two out, because the stock now $23.50, Mr. Rock Lobster. So off 5.5% just in the last 5 days. So he's looking a lot closer to that 22 half strike than he was at April expiration. So yeah, this stock has gotten annihilated just in the last few weeks out here. So yeah, this guy had a decent timing out here to get the heck out of Dodge. And when he did, and we have decent timing for you folks, it is time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Welcome to the mail block. Let's get a quick rundown of our polls out here right now. Our flash poll, so that's pretty much only during showtime. He asked you, does rally have legs or is this a dead cat bounce? 70% of you now saying dead cat bounce, only 30% in the Uncle Mike camp saying, yes, this rally has legs. Our actual question of the week, listeners, we asked you back at the beginning of the week. We said, hey, we're back in the red in the S this week. So how are you positioning in your broad market portfolio right now? Gave you 4 choices. Are you still long your SPY or SPX? Are you long SPY or SPX, but with the put or some other hedge? Are you in cash waiting to buy the effing dip? Or are you in or moving to crypto? And again, we heard you who wanted a short option. We didn't give you that. Next time we will, of course. So let's go out to Uncle Mike. Mr. Uncle Mike, what is your vote? And then what do you think our audience is voting for there? And also, do you have any thoughts on now 61.5% of our audience saying it's a dead cat bouncer?
Well, I mean, it remains to be seen whether today's a dead cat bounce or not. I'm not uberly bullish based on today's rally. I'm long-term bullish as I always am, but right now, in terms of where I'm at, I mean, I'm liking staying out of the money and fairly far out of the money with my put spreads. That's about as deep as I'm getting into this market. So I think that's something that we really need to be careful of for all of us as well as our listeners. In terms of the other poll that we have, I like the S&P with some type of a hedge. That's probably, but a distant short put for it to be hedged, so to speak. And then we're at where we are with everything right now. I think that it's going to be interesting to see what the Fed says next week because there's a lot riding on it right now, apparently.
Yes, indeed. Mr. Rock Lobster, same question for you. What are your thoughts on 2/3 of our audience roughly saying this is the dead cat bounce today? And also, what are your thoughts on our poll? Where do you weigh in and where do you think our audience is weighing in, sir?
I'm thinking it does feel like a dead cat bounce just because, again, when VIX is a 30, 2% is pretty much what you expect up or down. So it's not like this is a solid move up, but, earnings has still been kind of mixed for the big tech, and Apple is up a bunch they might do something, I guess. So yeah, I think the audience though is still on the the dead cat bounce camp.
What about our main question of the week? You think they're still long SPX, or are they long SPY with a put or other hedge? Are they in cash?
Okay. Oh no, I think they're long maybe SPY with a little hedge going on.
Okay. And Mr. Uncle Mike, I think you said that as well, right?
Yeah.
So let's look here to right now. It's still kind of a tie. This one's been contentious all week long. Right now, leading the dance with 36.2% of the vote is in cash, waiting to BTFD. So that's 36.2% of you. Followed hot on its heels by you're still long the S, SPY, SPX, whatever flavor. 34.5% of you saying that. Your long SPY or the S, but with the put or some other hedge is 27.6% of you. Only 1.7% of you right now saying you're in or moving to crypto. You got about a day left on that. And again, if you're listening to the podcast, probably too late to play along in our flash poll, listeners. That's why you got to be there on the Twitters throughout the day. Right now, still hanging out roughly 2/3 no. This is the dead cat bounce. 1/3 yes. This rally has legs. Let's squeeze in one more question here. Let's go out to Miguel. Miguel says, have you guys ever traded XSP? What are your thoughts on this versus SPY options? I do like the fact that XSP offers tax savings over SPY. Is that enough to make the switch? Well, you have interesting timing, Miguel, because we just talked about this last week on our Pro Q&A. We went deep into all things SPX and all the many and varied flavors of SPX, easy for me to say. And if you're not familiar with this, listeners, XSP was SIBO's attempt to try to mimic SPY by creating effectively a 1/10 size SPX that still has all the other benefits of the S, so the tax treatment and everything else. And as we concluded on our Pro Q&A, I'll give you a little bit of an insight here, Miguel. First off, I believe the Rock Lobster said he has never traded this. I have not traded it either, for the reasons we're going to lay out to you right now. Just look at the numbers. Look at the ADV on SPY versus XSP. SPY does almost 6 million a day, about 5.6 million last time you ran those numbers. The ADV in XSP, 22,000. So the spreads are going to be orders of magnitude wider in XSP. Now, you might say, well, I get the tax treatment. Yeah, that's good. But we pulled these numbers for our Pro Q&A last week. They're still relevant this week. But we pulled up an at-the-money call in SPY, and the market was extremely tight. It was 201 at 203. Market was a little higher then. It was 44.40. The same at-the-money call in the mini SPX, a.k.a. XSP, the market was $1.37 at 308. So you're going to pay more than $1 more for this same call. So you buy a 10 lot, it's $1,000 you're paying just for the privilege of paying or trading really this XSP. So it's up to you whether you think the tax savings are going to be worth it, but that's a demonstrable cost and slippage. That's just out of your pocket right there. So I would caution you against doing that. Mr. Rock Lobster, is that still your vote as well? Stick with SPY versus XSP?
Yeah, I don't like the XSP is just, all the tax advantages might disappear just trying to get in and out of the thing.
Yeah, if you're paying $1,000 every time you get in and get out, you forget about it. You're gonna have tax losses.
Yeah, I mean, I think SPY is probably one of the best. It's amazing how efficient they keep the market. It's kind of like Apple. It's sort of a trading zone. You kind of plop an order in there anywhere between the markets, and it kind of fills. It's just. I still think it's a superior product for the average retail person. So. It's just, it works. It works. It's massively liquid. What are you going to do? It's all electronic. It's insta-fill. XSP is I just feel it does have the taint of the Roach Motel upon it.
The taint of the Roach Motel. Mr. Uncle Mike, you play with a lot of SPY. Have you ever played an XSP? And what are your thoughts for Miguel here? He's thinking about dipping his toes in because he likes the tax advantages.
I think I tried it once many years ago, and it was just so illiquid it didn't work for me. I would love it to work because you get the 60/40 tax treatment on it if it's not an IRA. And so right now, though, what I typically do is I use the SPX, and then if I need more space to fill, then I'll use the SPY options as kind of a filler, doing the same thing, but just as kind of a filler to fill extra space. But I like the idea of it, and I wish it would work. But as with anything, if there's no liquidity on it, you shouldn't trade it.
Yeah, once you see those spreads, Miguel and anybody else, you should run for the hills and go elsewhere because the spread's going to tell you everything you need to know about how liquid this thing is. As we keep on going into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
By the way, how much longer can that 60-40 tax treatment hang around, right? You got Warren and everybody else floating, looking for some sort of red meat issue they can sink their teeth into. They're, derivatives have special tax treatment? I could just imagine them, if they were aware of it, it's being very much in their crosshairs. But I digress. A conversation for another day. Let's go around the horn and start with the rockingest of lobsters. Mr. Rock Lobster, sir, what are you keeping an eye on until we gather here together on Monday?
I believe Senator Warren loves crushing Elon Musk for as being a freeloader, I believe was her term. So
there we go.
She's been sinking her teeth into him lately.
So she has other targets right now other than SPX tax treatment.
Exactly. She has Elon Musk. So thankfully, 60-40 will still be there under the cover of Elon Musk's big shadow that he casts. What I'm watching right now is is it a dead cat bounce? So VIX futures basically stopped going down for the last 1.5% of this rally. So the VIX futures tanked until around about 15 minutes before showtime, and they have not let off at all, really. Now an hour and 20 minutes later. So, and we've had about 0.75 of a point, almost 1% rally in SPX from there. So the vol traders are like, whoa. So we'll see what happens. That's usually not the best sign that the rally continues, because you like to see some sort of confirmation, like some people actually selling vol, maybe writing some upside calls or something. So I'm not seeing that quite yet.
Mr. Uncle Mike, same question for you. What are you keeping an eye on until we gather here together on Monday, sir?
Well, it's continuing to watch this dead cat bounce or recovery rally, whatever the case may be. Headlines. That's what's happening this weekend. That's what's happening consistently. And so I would encourage everyone to make sure that you are prepared for the weekend with the risks with which it entails, because we are in that kind of market.
I don't get it. Are you implying that there's some headline or weekend risks, sir? I'm not sure what you're laying down there. Unfortunately, that music means we have to get the heck out of Dodge. But don't worry, listeners. We'll be back in 29 minutes or so with Mr. Tim McCourt to break down all the hot action in the world of futures options. And, of course, all you cool kids, all you cool cats and kittens in a secret club, just hang out, listen and live. We'll pump some fun stuff in there for you. We'll be back again live post-haste. The rest of you got to wait for it to hit the network. Let's go around the horn. Let's go to Uncle Mike first. Mr. Uncle Mike, sir, if folks want to hit you up, want to check out your YouTube or your tweets, where should they go? What should they do?
Go to YouTube and type in St. Charles Wealth Management. I should have another video out later today. Feel free to check me out on Twitter and give me a follow, Mike at Mike TOSAW. And if you're looking for a financial advisor, hit me up on my website. Hit the contact me button, and I will contact you. stcharleswealth.com.
He will call you. It'll be at 2 a.m. on your cell phone, but he will call you. stcharleswealth.com is the place to go to get that ball rolling. And Mr. Rock Lobster, if they want to perhaps have a personal one-on-one meeting with you in your tower of infamy overlooking the shores of Maine, where should they go? What should they do?
You got to call Ted, 888-TRADE-01. We just launched the new Option Pit Mentoring Program. Daily education, ranging from a half hour to 1 hour. Probably the best deal if you want to learn how to trade in a delta neutral, theta positive fashion. Low risk capital, but high potential return. You can learn from the ground up. I've never done this before, and it's the first time I'm doing it.
I was going to say, delta neutral, that's new for you guys, isn't it?
Yeah. So it's a theta positive, but however, long contract net. So it's if you want to learn how to, it's perfect for a market like this. So if you want to learn how to trade that, we got a few spots less. The class is limited to 40 only. So there is a little bit of the space. And again, if you call Ted, you can get 10% off 888-TRADE-01. So keeping the class small. However, Doesn't mean you can't learn something. So if you want to put some learning on, give Ted a call. And if you say Andrew is the most handsome man in options, he will give you 10%.
We all know lies, damn lies, and statistics, and more lies. You know who the sexiest man in options is, listener. So when you call Ted, tell him the truth to get the real discount. Maybe you want to get in on some of that delta neutral action, intriguing stuff. We got more intriguing stuff set for you in a little bit, listeners. All you on-demand folks, you'll have to wait till it hits the network. Just hit next on your device of choice. And we'll see you back here, of course, for TWIFO. Then tomorrow, of course, for Volatility Views, noon Central, 1 p.m. Eastern. All you secret club kids. After that, you get Options Oddities exclusively in your ear holes after that. And for the rest of you, we'll be back on Monday. Another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.